Good morning, ladies and gentlemen. Welcome to the show on this Wednesday, the 21st of October, 2020. Now, let's get started right away, and let's take a look at what's going on in the markets today. Let's start the charts right here and take a look. First thing we're going to take a look at is the silver price. It's $25.08. It's on the top side of its range right now. And it's holding the top side of its range really nicely, above $25. We can see over the last few days we've seen it go up a little bit. You know, I mean, it was down around $24.20. You know, a few days ago. It was like 3 days ago. Now it's $25.08. That's a good little substantial. Look, it's absolutely, the silver and gold market right now is absolutely bullish. You know. And as long as the Fed doesn't change their stance, I can't see it remaining anything but bullish. And I don't see the Fed changing their stance. Simple as that, you know. Let's take a look at gold. Okay, flick the chart over here. 1926.10 for gold. It's up $20.30. Now, that's a substantial gain for gold. 1926. So you know, it's looking really good. You know, it's the beginnings of what I think is going to be a multi-year bull market in gold and silver, you know. And for the investor that wants to really just basically buy physical metals and sit and hold them, your payoff is going to be really great over the next few years, you know. Conversely, if you take a look at the person who's just leaving their money in the bank or sitting on an IRA or something like that, you know, you're not going to do so good. What you're going to find is your dollar's still worth $1, yes, but what you can buy with that dollar is going to be diminished. By how much? Well, we'll have to wait and see, but I think it's going to be substantial, and that's not even in the long term. Okay, in the long term, the dollar could go to nothing. You know, what you got to realize, all you're holding is polymer, pieces of polymer. It's not even paper anymore. It's just polymer. And its actual value, I mean, you can't even use it for anything, you know? In the old days, like when they had their hyperinflation in Germany, you know, at least they could use it for things like, in the toilet, they could use it there, or they could use it to light the stove with, you know, or stuff like that. But this polymer, it doesn't even have any real use any more than your trash you have in your house. You know, if you got trash around, you know, in the trash bin. I mean, it's got no more use than the cellophane you take off of your package of cookies or whatever and throw in the trash bin. That's how much use you got for this polymer. That's what these bills are now. But now they're going to change them over. You're not even going to have polymer. All you're going to have is digits on some sort of new digital wallet that's coming. That's where the central banks are going with this. So what's a digital whatever worth? Well, you know, if your kids play World of Warcraft, you know, they work all day in there to collect gold, what's called gold. And all it is digits inside the computer screen. Like, oh, Ma, you turned the TV off. You know, I can't. Oh, my digital gold's gone. Oh, you ended my account to Warcraft, you know, or whatever. You know, all my digital gold's gone. You know, it becomes important to them. Just like this new digital money, and the dollars already actually went digital. For these rich people out there, it becomes extremely important for them to accumulate as many of these digital assets as they can. But it's no different than the kid sitting in front. He's got all this digital gold on the World of Warcraft game. That's how much it's worth. Yes, right now you can still buy something with it. What do you think's going to happen when it suddenly dawns on all of these people who work so hard to get their billions, and it's all in digital? They're going to try to get out into something that's actually has some tangible value once they start to see what's happening. And, you know, that consensus across that large group of people that has all that extreme amount of wealth, when they suddenly realize, hey, you know, this wealth is going to be eroded at an unprecedented rate, there's going to be a panic for them to get out. And, you know, If 1% of those people move out and try to get into real physical gold and silver, they'll absolutely destroy this market. So that's where we're going with this. Cryptocurrency today, 389 billion. It's taken a good pop. And the Bitcoin dominance has even went up higher. Yesterday I was complaining that it was 60. Now it's 61.1. And we're looking at a Bitcoin price, you know, of $12,833. It's gained over $1,000 in the last day. So I was saying it's a bearish signal, the fact that the Bitcoin dominance is so high. Well, it's not proven to be that way in the last 24 hours. I mean, they're piling into Bitcoin, you know, better than gold and silver even. And, you know, I think this is the beginning of a cryptocurrency bull market too. I think that these assets, cryptocurrency, you know, a lot of people say that it's digital fiat. It's not. And the reason why is because of the limited quantity of Bitcoin. Fiat is unlimited. They can make as much of that as they want, just by the push of a button. But there's a computer algorithm that regulates Bitcoin and makes it so there'll never be more than 21 billion. Nobody in the world can make more Bitcoin than that. And you know, a lot of them are getting lost in the system. Little pieces, you know, a person might have an account on an exchange or whatever, and they move their Bitcoin out of the exchange, and there's some Satoshis left. A few, you know. It happens over and over and over again. Sometimes people have an old laptop, and they might have 1/10 of or 1/100th of a Bitcoin in there. And the laptop will break or whatever, and it's just not worth it for them to take it out and have the hard drive professionally recovered, you know, because the Bitcoin may only be worth $20 or whatever, you know, so they'll let it go with the old laptop. That's gone. It'll never be recovered, you know. One guy, he had 7,000 Bitcoins, and his laptop ended up in the trash in the dump. He was searching through the dump trying to find it. I don't think he ever did find it. Well, those Bitcoin would be lost, you know. And so they're constantly being nibbled away at that 21 million. Anyway, let's move on. The Dow Jones Industrial Average today is down 81 points. 81.75 at 28,227. It's near its all-time highs. It's only about 1,500 points off of its all-time highs, you know, the Dow. And so we see this huge fall off in the Dow that came back earlier this year. It went all the way down to 19,173, you know, and now look, it's all bounced, made up almost all that loss. On what? On a crisis in the economy. So beware. If you're going to buy into this Dow right now, beware. Realize how oversold it really is, you know. And that there's a lot of volatility, and it can drop faster than you can get out. But what do I think? I think the limitation to it dropping, I don't think they're going to let it drop. If they let it drop, it would go all the way down to 2,000. I'm serious. It would go down more than 90%. It would be just like 1929 if they let it drop. But I don't think they're going to let this drop. I think if it starts to drop, the first 4,000 points it drops, I think you'll see that the Fed will be very nervous. And then if it drops much more than that, they're going to come in and react somehow. You know, and they're going to stop it. And they're going to make it go back up again. Whatever they have to do. I don't know what they might do to make... They got a lot of tools. These people that say that the Fed's out of tools, that's the biggest malarkey in the world, that the Fed's out of tools. You haven't seen the stuff the Fed can do if they want to. The power that the Federal Reserve has is unlimited. You know, and their money creation tool. You don't know all the stuff that they can do, and it would amaze you. And at some point in the future, maybe a year from now, 2 years from now, you're going to look back and you're going to say, oh my goodness, I didn't realize the Fed had these new tools that they can use. They could send every single person in America a little credit card in the mail. And you open it up, and the credit card has got like a $35,000 limit on it, you know? And and there would be no... there'd be no interest on it to pay. And suddenly you got $35,000 to spend from the Fed, you know, and I mean, they can do that. They can. I'm not saying they will, but I mean, can you imagine if every person in America got, even the kids got a credit card from the Fed that said suddenly you got $35,000 to spend? Can you imagine what would happen to the stores and everything? All these retail stores are closed. I mean, suddenly all these people would have all this newfound money and the economy just go pop. The economy would just boom. It's all about money, guys. Right now, the money right now in the general economy is drying up. All over the world, the money's drying up, but they can create money. And not that there's a price to pay for that. If they do that, the price is going to come. The price is going to be the erosion of the purchasing power of the currencies. And of course, that would immediately, if they did something like that, if they send everybody a credit card, immediately you'd see all these rich people running for the gate trying to get into something of hard assets. Gold could go up $1,000 in a day if they did something like that. But you know, in the end, they might have to do something like that. Let's take a look now at crude oil, $40.10. It's down $1.60. It's not looking good for crude. You know, I've been saying that. You see these steps, these stair steps. It's going down. It was up at. It's been. I'm on the 5-year chart, but let's take a look at the. Let's take a look at the 1-year chart. They've been holding it pretty level at around $40. But you know, it's going to be harder and harder for them to look at this drop right here. This massive decline in the price of crude, where it went down to negative $40. You know, this is what they're staring in the face right now in crude oil. The price could drop. We could see $30 crude, quite seriously. And how would that affect the world's economy? Well, it's an oil-based economy. You know, and this would be a huge impact to the markets. But you know, they can create unlimited amounts of money. So don't forget when Jay Powell come out and he's told everybody we can create unlimited amounts of money. Making money is not a problem for them, you know, and they don't really have a problem with it because the Fed now at this point has kind of joined up with the executive branch of the United States government, and kind of become the Treasury and the Fed have kind of merged together, you know, and in this merging, what they've done is they've created different types of venues for money generation. It's already in, and they've already got it in. It's like a wheel that they can spin, and as they spin that wheel, the money comes flying out, you know. Yeah, they're holding off right now. They're basically buying time is what they're doing, you know, in the money creation, holding off the stimulus and everything. They're basically buying time right now. They're trying to extend this hyperinflationary scenario out long as they can, trying to stretch it out by allowing for a little bit of deflation in the economy, to try to stretch this thing out. But the ultimate end game is hyperinflation, and there's no avoiding that, because at a certain point, when the economy starts to turn down, they have to come in with more money each time, more venues that they have to create in order to prop up these asset bubbles. You know, and each time they create a new venue to hold up the asset bubbles, you know, like maybe they're purchasing corporate bonds, or they might be. This is a new venue they create. In the repo window, it's a new venue that they create. Every time they create one of these new venues, they're not able to take it away, because the economy would collapse. So basically what it's like is a giant dam that's holding water, and it's springing leaks here, there, and everywhere. And what they're coming and doing is they're shoring up each of the leaks as the new leaks appear. But the leaks are coming faster and faster and faster. The dam's going to break. Basically what I'm saying is they're trying to drag this out as long as they can, but ultimately the dam is going to break, and it's all just going to fall to pieces. Bonds and rates today. We're looking at rising bond yields today, and you know, I said they're going to try to keep the 10-year at 0.75. Well, it's up to 0.80. And the U.S. 30-year, they're going to try to keep it at 1.5. Well, it's at 1.6. This is creeping up on them. They can't like this, the fact that the long end of the yield curve is rising. They do not like that, you know. They got to keep these rates down low, and so they will come in and they'll try to suppress this at a certain point. But they're letting it move a little bit. You know, how far will they let it go? Well, they might let the 30-year go as high as two points. And they might let the 10-year go as far as 1 point, or maybe even 1.25, you know, before they step in. The MOVE index today, we can see that it's down a little bit, 1.22%, but we can see overall since the 5th of October till now, it's been an upward trend in the MOVE index. So I expect this upward trend to continue. Let's take a look now at the U.S. dollar index, 92.53 on the U.S. dollar index, and it's declining today. It's declining rather nicely. It's fell like a half a penny. Now, you got to realize the dollar is being compared to these other worthless fiat currencies. Can you imagine how quick the dollar would decline if it was against gold? If it was measured against gold? But that's what it should be measured against. It should be measured against gold. It's not. You know, I mean, what to say about that? Anyway, listen, guys, you ever done your morning exercises? You know, you get out there, you're in front of the bed, you know, you're like, stretch, kick, stretch, kick, stretch, 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 kick. Well, stretch, kick, you know, doing your morning exercises. Well, maybe animals do the morning exercises too, but anyway, that's what he's doing. He's doing his morning exercises. Anyway, listen, guys, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.